Hey there everyone, this is Joe from Bullion Now here with your weekly precious metals technical analysis. The last few weeks we've been doing an overview, or a big macro look at the big four: gold, silver, platinum, and now we are up to palladium. That's what we're looking at today. Of course, head over to bullionnow.com.au. If you're in Australia, you can visit us here, you can call us on this number, or if you're international, you can email us here, sales@bullionnow.com.au, because we ship bullion bars and coins worldwide at excellent prices, excellent shipping prices as well. Of course, hit the big red subscribe button here on YouTube. 102 subscribers now, woohoo, climbing up in the world. Of course, for our weekly technical analysis videos, our weekly auctions, our other excellent stuff that we do on the YouTube page. So go to youtube.com/bullionnow to check it out. Okay, here we are, the Palladium price, priced in US dollars, of course. And this is going back to 1998. And we also have the macrotrends.net website as well, and it just takes you a little bit further back, although it's not as interactive, but it takes you back to 1977 roughly. Now, of course, as always, everything I tell you today is not financial advice. It's my personal opinion. It doesn't reflect the opinion of the directors of Bullion Now. So anything I say, you just take it as what I would do myself. And I'm not going to give you any predictive prices. I'm not going to tell you the price is definitely going down from here or definitely going up from here. I will tell you, if the price goes down from here, here's some certain targets that you could look at, and same on the upward direction as well. So let's have a look at macro trends. Again, going back to 1970, you had a low in 1977 of about $40. And you've had some key lows at $50, you've got $80 here, and then you've got another one at about 170, 160 something. So that's a definite downtrend, the uptrend line here, the bottom uptrend line, and here you have the top uptrend line going through these key highs. And this is about $300 roughly in 1980. And you've got about $1,000 roughly in 2001. But now we are in all-time high territory. We've broken through pretty recently through that $1,000, $1,100 mark right here. Let me get rid of that. And now we're definitely in all-time high territory. It looks to me well, actually, no, I won't tell you that, because I promised I wouldn't give you my predictions of where the price could go. Definitely could go. But what you might notice here is I've, instead of drawing them in as I go, I've already just put them in just to save some time. We've got our trend lines. Now, this one right here is as closely matching to this one here as possible. I did it as closely as I possibly could. So that's a very long-term uptrend line right here, a bottom end of an uptrend line of the trend channel. And you have this other trend line right here going through the low of approximately 160 something back in 2008, and going through the next significant higher low at about $450 in about only a few years ago, in January of 2016. So I think that one's definitely in play as well. And you can see here I've got the Fibonacci lines calculated in from the old high of about 1100 and that old low of about 140 something. Now, in the last couple of videos, what I've made mention of is once an all-time high is broken through, you tend to, not always, but you tend to visit either the 1.618, which is this one right here, the 1.618, or the 2.618 before you see a significant retracement. So what you can see right here is after breaking through this 1100 all-time high, and we did that in about October last year, we've had this steady climb up to very close to the 1.618 mark of about $1,680 US. And at the moment, let's punch in a little closer. Let me just get rid of, put that on auto scale. Let's punch in. We're looking at the monthly time frame right here. You can see once we punch through that 1100 mark, We're up to, it took us what, 1, 2, 3, 4, 5, 6, 7, about 8 months to get to close to that 1680 mark at the 1.618 level right there. But at the moment we are seeing a bit of a retrace. So let's talk about where the price could go if we see lower prices from here. We'll talk about slightly lower, and then we'll talk about significantly lower prices. So I think definitely moving down from here, you've got this level right here, of course, the old high of around about $1,100. And usually once you break an all-time high, wherever it goes up to, it tends to, again, not always, but it tends to come back and revisit the all-time high at some point. So I definitely think the $1,100 mark could be in play rather sooner or later. If the price does break down from here, you would definitely see this level right here. Let me just pop in a horizontal line. You definitely see this level here at your $1,100 mark roughly as an area of support. If it does break down further from there and we go back into this range right here, where are the next key levels? The obvious one is this one right here. I'll pop in a line, but you can see it's actually very close to the 78.6 Fibonacci calculated from, again, this high and this low, and that's around about here. Let me just pop that in. There we go, close enough for jazz. You could, if we do bounce off here and then continue down, well, then you could see this level right here, and that's hovering at around about $900 roughly. Don't forget, you might have the psychological value of 1,000 that might be in play. And moving down from there, well, you've got this, as I said before, this uptrend line that I think would definitely be in play if we continue going down. Because trend lines are a very good predictor of where prices could stop at before they see a reversal in price. So that really just depends on when, if and when the price would go down here. So, for example, if you had, and I don't think this would happen, but again, I can't say for sure. But if, for example, in the next month you had a crazy price drop. In the next, in the next couple of days, because the end of the month is coming up very quickly, then you'd see it come all the way back down to the line here, which happens to coincide with this Fibonacci line, which is the 50% mark, no, 61.8 mark, sorry, and that'd be at about $740. But I highly doubt that's going to happen, but it just really depends on when the price would hit there. So just keep that one in mind. So there's that level there, as I said, 1100, the all-time high, and about 900. If we are in a bear market from here, let's talk about the other significant areas of support. What am I looking at? Let's see, I think we've talked about this area right there. The next level is, if it's not Fibonacci at the 61.8, well, I will include the 61.8 line for sure. That's always a definite. Actually, I already mentioned that one at about $740. I mentioned that one at the 61.8. Moving down from there, of course, you've got this next previous level of support at about $450, and breaking down from there, well, you've got the very long-term uptrend line, as I mentioned before. This one right here, and if we go all the way up through there, it takes you up through to here. And for example, if we were in a bear market and we saw prices come down and have a bit of a spike and up and down, etc., you could see definitely it touch this long-term uptrend line at some point if we are in a bear market from here. Now let's talk about on the upside. So what I need to do is just move this around a little bit. So as I mentioned before, we tend to visit either the 1.618 or the 2.618 before we see a major retracement. And sometimes what happens, not always, is that you have a run up to the 1.618, a brief amount of retracement, and then a continuation up to the 2.618 before you see a significant retracement. So moving up from here, if this was the this little blip right here in the month of March, if this one right here happens to be, so we're breaking up from the 830 mark all the way up to the $1,600 mark, if this is not the significant retracement from here coming down to either here, or this trend line, could this be the fake out and then we see a fast move in the opposite direction? And I would suggest that the 2.618 would be the next level of resistance. In the meantime, or moving up from there, don't forget though, you do have some psychological values. You have this massive psychological value at 2,000. We like round numbers, even round numbers as humans. It's just so it's a definite psychological value, but if it breaks significantly up through there, I think the level of approximately 2,600, between $2,600 and $2,700 in US dollar terms, could be where the price lands at before a significant retracement. And again, as I mentioned, when we have a significant retracement, we tend to visit previous all-time highs. So could we visit the previous all-time high of 1,100 now before we go up to 2,600? Absolutely could be the case, but if it's not, if this is a little fake out, as I mentioned, I reckon 2,600 to 2,700 would be your next level. And moving up from there, blue sky thinking just for a second, we can always do that. You've got these other Fibonacci lines, and I'm still going to count the high, the old high of 1100 and this old low of 145 roughly as the key highs and lows. And then moving up from there, you've got the next significant Fibonacci level, the 4.236, and that's hovering at approximately right now $4,170. And let's blue sky think even more, the 6.854 at $6,660 roughly. But that's, could be way down the track, you never know. But I've just given you my where to's if we head down from here, the where to's if we head up from here. Again, I'm not going to give you any kind of percentage likelihood of where I think the price is going to go, because I don't think that's the right thing to do, but just keep an eye on those particular targets in the bear market, if it's a bear market that is, and in the bull market if it is a bull market. So pause this video, you can go back, you can mark them down, you can write them down, and keep an eye on them. Even if you're not trading in Palladium, maybe just mark them for the future, and then down the track, come back to where you wrote it down and see, hey, did it go to roughly where this random dude on the internet said it might go to before significant areas of retracement or of support. So that's it, gang. I'll keep it at that. Of course, don't forget to subscribe on YouTube at youtube.com/Bullion Now. Next week, seeing as though we've done the big four, we've done platinum, palladium, we've done gold and silver as the big macro overview, I'm now going to start getting tighter in with the time frames. So for example, XAU, XAG for silver, for example, instead of having a look at it on the monthly time frame, I'll be punching in and looking at the daily and the weekly to see where the more micro movements may go. So that'll be that moving on throughout the weeks, the months, and the years. And of course, if you want to buy from us, you know what to do. Visit us here, call us here, or email us here. That's it, gang. Stay safe, and I'll speak to you soon.